This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices fell for a third day in a row to a two-week low on Wednesday on a surprise build in U.S. crude stockpiles, negative U.S. economic reports and worries the spread of the coronavirus Delta variant will weigh on global energy demand. Traders noted the oil price drop came despite reports of increased Middle East geopolitical tensions. Brent futures fell $2.01, or 2.8%, to $70.40 a barrel by 1:02 p.m. Eastern Daylight Saving Time, 17:02 GMT, while U.S. West Texas Intermediate, WTI, crude fell $2.49, or 3.5%, to $68.07. The U.S. Energy Information Administration, AIA, said crude stockpiles rose by an unexpected 3.6 million barrels last week, while gasoline inventories fell by a bigger-than-forecast 5.3 million barrels.
U.S. crude oil stockpiles rose, while gasoline inventories fell, in a signal of steady demand for fuel, the Energy Information Administration said on Wednesday. Crude inventories rose by 3.6 million barrels in the week to July 30 to 439.2 million barrels, compared with analysts' expectations in a Reuters poll for a 3.1 million barrel drop. Stocks at the Cushing, Oklahoma, delivery hub for U.S. crude futures, however, fell for an eighth straight week, dropping by 543,000 barrels to 34.9 million barrels, their lowest since January 2020, the EIA said. Gasoline stocks fell by 5.3 million barrels, the EIA said, far more than expectations for a 1.8 million barrel drop.
Moving on to the top news in the energy sector.
India state refiners are set to invest 2 trillion rupees, $26.96 billion, to boost oil refining capacity by 20% in Asia's third-largest economy by 2025, Junior Oil Minister, Rameswar Telly, told lawmakers on Wednesday. India, the world's third-biggest oil importer and consumer, has refining capacity of about 249 million tons a year, equivalent to about 5 million barrels per day, BPD. Refining capacity is expected to climb to 298 million tons a year by 2025, Telly said in a written reply. The refining industry has been modernized and upgraded continuously with the indigenous and imported technologies for refining cost reduction and product upgrading, he said.
Japan's trading houses are riding a commodities boom as major economies recover from the pandemic, with Itochu this week reporting record quarterly profit and three others raising their earnings forecasts. The first quarter results highlight how commodity price swings dictate the bottom line for Japan's general trading houses, known as Sogo Shusha, which have been boosted by higher prices for raw materials. At the height of the pandemic last year, strict lockdowns depressed demand and led to oversupply that weighed heavily on commodity markets from oil and liquefied natural gas, LNG, to nickel and other metals.
Next, we have the top news in metal markets.
Steelmakers need to take urgent action on producing less carbon in order to meet the Paris Agreement on climate change, investors managing $55 trillion in assets said on Wednesday. Emissions from steel production account for 9% of the global total and must fall 29% by 2030 and 91% by 2050 to meet the net zero scenario laid out by the International Energy Agency in May, the Institutional Investors Group on Climate Change said. The IIGCC, as part of the Climate Action 100+ initiative, said in a statement that while it was technically feasible to reach net zero greenhouse gas emissions by mid-century, the steel industry was being too slow to act.
A slew of measures by Chinese authorities to tame soaring raw material costs has had only a fleeting effect, leaving the world's largest manufacturing base facing the harsh reality of substantially higher input costs for the foreseeable future. China's enormous manufacturing industry, population and fast-growing economy mean it has uniquely large commodity requirements that substantially exceed domestic output. The recent boom in the price of everything from copper to coal has pushed the country's producer prices up by the most since 2008 and dragged on its recovery from the coronavirus pandemic. With major economies in Europe and North America also cranking up again after coronavirus lockdowns, competition for raw materials is only expected to intensify, limiting the near-term downside for prices. We will now look at the top news in the agricultural sector. Corn and wheat futures slipped on Wednesday, tracking falls in outside energy markets as rising Delta variant coronavirus cases raised concerns about a return to restrictions that could limit demand and overwhelmed recent weather concerns for U.S. crops. Chicago soybeans traded both sides of even, supported by a private assessment of the U.S. crop, released Tuesday after the market close, as well as uncertain forecasts across the Midwest in the coming days. Grain markets also anticipated next week's U.S. Department of Agriculture monthly supply and demand report for revisions to U.S. corn and soybean yields and global demand.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.